Okay, so it's been a couple of weeks since we started forward testing, and in our forward test now, I have about almost 30 trades recorded. So I went ahead and did my first review. Let me show you the spreadsheet first, though, the difference between back testing and then forward testing, and why I say not to do a whole bunch of back testing because you're really not going to gain that much out of it. So check this out. This is our forward test. We had a very poor performance last week on the strategy, and we've brought our win rate down to 44%. We've brought our expected outcome down to nothing. And you can see here on the aggregate, we actually would have lost $30. So over 30 trades, we're actually in a losing position now, slightly. I mean, call it break even, right? This is why you would go ahead and back test 2,000 occurrences or 25 years of back testing, and then you would do 1 or 2 weeks of forward testing and be in this situation and be very discouraged because you put all this effort into back testing and it doesn't amount to anything. And it doesn't. That's why I say don't back test more than 50 occurrences. There's nothing to be gained by it, at least for a day trading strategy that's aimed at developing a discretionary approach, which is what most people are trying to do. So I went ahead and tried to figure out if there was a couple of things that I could see on the charts that would help to provide more edge. I'll show you what I mean. So a couple of common things, I mean, this is more on the daily chart, is we look for the 50 period, which is this green line here, the 50 period to cross over above the 200 period. And you can see in this particular day, which was Tuesday, last Tuesday, the 7th, that, that actually would have been a strong indicator into after hours. It would have been good. So I decided to include that in my back test. I actually went back, looked at all of the forward test and the back test, and just kept track of how many times this actually would have worked here. In addition, I wanted to see a volatility expansion or contraction. Uh, the range ATR is basically what I'm saying. I wanted to see if ATR would make a difference. Is a big ATR going to make much of a difference, or is a smaller ATR going to make much of a difference in the size of the move that I'm going to get? Or more than that, I wanted to see if a volatility contraction would lead to a big breakout. That's kind of what I was looking for. So I went back in the charts and I tried to find all these occurrences and I tracked this ATR right here at the entry. And here's what I came up with. Let's go back to the spreadsheet. I tracked it here. You can see I added the ATR and I added the 50 SMA either above the 200 SMA, not above, or close to it, kind of like above the 100 SMA and kind of approaching within 1%, is it getting ready to cross is kind of the mentality there. So I tracked all these and I put it in, I tracked them all so that you can see. And I just used ChatGPT to help me out here. And it said, did it make a difference? Yeah, maybe a little. This is not the kind of improvement to my edge. Like if this number was like 60 or 70%, where it was above the 50 SMA was above the 200 SMA, then I might consider adding that to my strategy. As of right now, the close was almost the best, but you can see like there was only 23 times out of the whole back test and forward. Like it's not enough occurrences to really make any decisions. And then, of course, as we thought, if the 50 SMA is below the 200 SMA, yeah, obviously that's not a good entry. So, long story short, I spent the morning going through everything, adding this criteria, and it's a bust. It's a bust. This doesn't add any edge meaningfully in any way whatsoever. And that's going to happen. The information that you gather from it is that it doesn't help. it doesn't matter. So you just scrap it, put it in your back pocket. You don't need this information right now. Maybe it would work better on a 15-minute chart or a 30-minute chart. And certainly that's something that could be tested. As of right now, though, what I'm seeing more. So I traded this mechanically because I wanted to show you what it would look like. I was pretty sure that we would get the results that we got when we started forward testing, which is that we had this incredible back test and then we went to trade it for real, and it basically just didn't work out. It was break even, markets are efficient, there's no edge. And that's the way it works out oftentimes. You have to continue to refine that mechanical approach. And of course, I'm at a point now, right, where I have a fair amount of intuition, or maybe you might just say I'm able to bring other factors in that are not part of the actual criteria that we're tracking for the strategy. I'll give you an example here. On gold futures, when I pull up the daily chart, which is what I'm looking at, I have my long-term trend, my long-term uptrend established. I have my pullback trend. This is a swing trading thing, and this is why I encourage everybody to start with swing trading because y- I'll go more into that in a second. But right now, the point I want to make is that this bounce right here, this is an incredibly bullish candle. There's definitely day trading opportunities in here. When we get to this line here, there's not day trading opportunities until it crosses above that, till we see it align, right, with the direction of the overall trend. We see it start going up. But until it does that, it might just follow this short-term trend all the way back down, and it could break the long-term trend. We don't know. So this day, this day, this day, this day, almost an entire week's worth of trades would have been risk off for me. I would not have bothered trading any of these days. I might have traded this day just with an entry at the break over this candle and a take profit at the line. That might have worked, but the rest of these days, I would not have day traded. So I'm going to start incorporating stuff like that into the strategy, where if I see it's a risk-off environment for some technical reason, then I'm just not going to trade it. The same with oil. We came out of the long weekend on Tuesday, with a ceasefire that, it was always kind of a little sketchy where that Iran ceasefire was actually going to stick or not. But the day that we talk about a ceasefire, that is definitely a risk-off environment. As long as there's a ceasefire in Iran and they actually stop warring with each other and bombing each other, then that's a risk-off environment because the Strait of Hormuz could open, tensions are de-escalating, therefore oil would come down. Basically, the fundamental reason that oil has momentum is really in question. So that would create a risk-off environment for oil. So going back to why I encourage people to start learning to swing trade first, because all of this stuff on the daily chart, these levels, like they don't matter. They don't really hold up. You're kind of taking a 50-50 chance that something's going to move. The high, the low, the open, and the close of yesterday are probably the best intraday key signals, but technically they're yesterday's, right? So the best signals are off the daily chart, and you can see here that this downtrend did create chop, and I did get chopped up trying to trade this mechanically, and it just kept bouncing off that line. Could you go short? Absolutely, but that's not the strategy that we're trying to develop. We're trying to develop a long momentum strategy. So you do have to zoom out to try and get key levels, and the swing trading levels do provide some of the best levels. If you want to learn to day trade, the most important skill you need to develop is trying to judge where the price is going to go at the start of the day, before the day starts. And as with any indicator, your intuition and your discretion are not going to be right all the time. You're just trying to be right more often than not. To say it a different way, you're trying to see what's more likely. Is it going to be a neutral day, a bullish day, or a bearish day? And then you want to try and give it some sort of percentage based on your experience. If you've been trading for a year or 2 years, I'm just going to rip off the band-aid and be honest with you. You don't have enough market experience yet. You need like 5 years or more market experience to start getting to the point where you can accurately judge that. Can you speed it up? Yes, you can speed it up by tracking it, by simply just starting tomorrow and drawing lines on the daily chart, drawing your support and resistance, and just saying, where do I think that this is going to go based on the news, the macroeconomics, everything that I see, and the technicals on the daily chart? Where do I think the next candle is going to go? Just start tracking that. Give it a percentage at the beginning of the day, and then go back at the end of the day, and it's a simple yes or no. Was I correct or was I not correct? And by doing that, you're getting the feedback that you need to start trying to figure out what exactly moves the price. Okay, so going forward, the two things that I'm going to start incorporating into this strategy are taking more signals off the daily chart, and keep in mind that a lot of money is made on not placing trades, not trading every single day. If you're more likely to get stopped out on a certain day, then just don't trade that day. Just trade the days where the probability is more likely that you're going to get the move that you're looking for. So, like I said, in here, I probably wouldn't have traded that. And going forward, I'm going to listen to that. I'm going to be looking for that. So, the second thing that I'm going to start looking at is not necessarily being stuck between 6:30 and noon. So, on this day here, for example, we had a nice entry later in the day. It looks like around 2:20 in the afternoon. So if I see something setting up, I'm gonna probably take that, especially if it's something that lines up with a bit of a breakout like this. So here's exactly what looked good to me. This looks like a breakout because we broke above this short-term trend line on the daily chart, the mean reversion trend line. Then we pulled back to the trend line and then we scooted higher. That looks really good to me. That's a trade that I would take all day long intraday. So, right or wrong, it's worth the risk. You can see, like, you would have been risking here and you would have got in about here, and there was lots of reward on this. So, those are the two things that I'm going to be looking to incorporate in the forward test going forward. Some other things that I would like to test is I like to get on the Bollinger Bands here again and see. I'm just really stuck on this, and I could be wrong. This might not produce any different results than the testing with the ATR. But what I'm looking here is the volatility contraction, because it is a momentum stock, and momentum stocks will have those volatility contractions combined with a breakout will lead to a big volatility expansion, which of course the price will go up massively. So I'd like to look at this. You can see here on the 5 minute chart, you can just see right now, like there's not much here. This just looks like noise. But maybe on a half an hour chart, I might be able to see the difference between the volatility contractions leading to the volatility expansion. I don't know yet. That's something that I definitely want to back test and incorporate into my results. So I'm going to leave you with this thought though. In our forward test so far, we still don't even have, actually, that's only 24 trades, isn't it? It's not 30. That's 24 trades. That's not much of a data set. I really hesitate to make any major changes to this strategy with the 50 back-tested occurrence, I already talked about being fairly low quality data, and then 24 forward tested occurrences. It's just hard to tell anything over 2 weeks. We had one bad week. Next week could this strategy could spring back to life, and then the week after we might have a stellar week. We have no idea. So we just need more information. So that's where we're at for now, just settling into forward testing and trying to get as much data as we can.